good morning. It's Mike Shunke with Berkshire Hathaway Homes and Shift One Properties in Scottsdale on our way to Paradise Valley for a Friday morning meeting. Quick market chat with Mike. What do we have? Still inventory. Multiple listing service. 13,076 single-family detached homes for sale. That's up about 124. Maricopa County, we're up 130 to 9,629. Scottsdale, we're down 26. 1,152 single-family detached homes for sale. We're back to the beginning of October for single-family detached home inventory. And it's been a crazy week. You know, we're looking for a couple needles in a haystack. And some land in Cave Creek and residential about 750. Let's see, prices for residential. Really pay attention, you know, when you read the headlines. All real estate is local, even hyper-local, neighborhood to neighborhood. Look at the statistics. Average prices are up about 3% this year. If you look at the median price, which is a better gauge, prices are pretty stable in the Phoenix metro area. You know, the higher-end homes are selling, so that's why the average price is higher and the median, half above, half lower, is pretty stable. So prices are pretty stable. You probably heard everybody's celebrating dropping mortgage rates this week. I don't think it's permanent, but I'm getting off here. I don't think it's permanent. We had about a 50 basis point drop. It's half a percentage point, which is significant on a $1 million house. That's going to save you almost $300 a month. So when you're shopping for a property, don't get hung up on that final price. If you're looking at $1 million or $2 million, don't get hung up on that. You know, we've got the financial background. Let's see what your monthly budget is, unless you're paying cash. If you're paying cash, great, that's easy. But let's look at, don't get hung up on that final price there. You know, seller incentives averaged for the month of October just came out. Average seller incentives was $9,700. So average price is about $500,000, or I think $4 something. So you're getting, sellers are paying $9,700 in closing costs, maybe to pay down rates. You know, there's different ways to make that work. Let's look at the options that work for you. Commercial, another thing I want to mention, separate commercial and residential, different markets. Commercial, residential, everybody needs a house over their head. Financed 30 years usually, or cash. We see about 27% cash in residential right now. One thing I haven't been able to find is, you know, that's 27% complete cash purchases. I want to know the number of how many $500,000 down payments are we having on $1 million property. I bet you that's pretty significant, because we're getting a lot of people relocating and putting some large down payments down. Commercial, and then we'll talk about the economy a little bit. Commercial, went to a super interesting meeting last night. I actually was talking to Steven Ship. He is the guy that you call when your $100 million portfolio is not getting the returns you like and you need a loan modification. He thinks we're going to see a lot of loan modifications in the commercial. Commercial is financed. Very rare does anybody pull a check out of their pocket and pay for that building. And we're talking about big commercial, big office space, and that's what you see in the headlines. One more thing on residential, I saw, I think it was Reuters or Bloomberg. The headline said residential prices down. That was the headline, the big attention grabber. I clicked on it. The article was from London, 2018, and they just released it last week. So when you read, don't pay attention to the headlines, look at the facts, see what you're reading as an average price, median price. Anyway, back to commercial. That's financed with big money. A lot of it's investors, bond prices, and we're talking hundreds of millions of dollars. A lot of that is financed, you know, with 2, 3, 5 year, 10-year loans. So those properties that they bought 2 years ago for, say, $50 million at a 3% interest rate, that's got to be refinanced in the next year, 1 year, 3 year, 5 year, even some 10 years. So that's what they're talking about. That's what they're afraid of, is some of those buildings are unrefinanceable just because the rates are up. So it's interesting. We're still working on that deal. We got over a big hurdle. It's a what's the word? It's a third party owns it. It's a special servicer, it's called. So we've got a lot of hurdles to go through, but we finally got approval for the sale to go through, so that's good. Didn't have a government shutdown, so our client's SBA loan's moving forward. I never thought I would be excited about more government spending, but if it makes this deal happen, that's good. So commercial's busy. What did I see? Industrial, big industrial over in west side of Phoenix. I just read it as I signed a 438,000 square foot big distributor company signed a lease for. So industrial's big. Multifamily, are some of those guys going to get hung out to dry? When money was cheap, 1%, 2%, 3%, a lot of people wanted to invest in multifamily properties. I hope they did it right. I hope they bought right. I hope they knew what they were doing, because that's going to come up real soon. I don't know what's going to happen with that. Earlier in the week, builder sentiment was down about 6 points, which is interesting because, again, just as I was leaving the house, they had October housing starts was up a little bit, and permits, that was up a little bit too. So earlier in the week, they were saying builders were kind of down on home sales. They're making money. They're the ones that are able to take a left, straight. They're the ones that are able to buy down the mortgage rates. But then when you see permits at highs, I've got my instructions here. So that's why we go live. This is us. This is what we do. So, let's get to know us a little bit better. Ask us questions. If you have any questions, let us know. I have a hard time reading with my glasses, but let us know the day before. We're going to be here every Friday at 8 a.m. So let's talk about the economy. Bonds came down a little bit this week. Big CPI number, or a low CPI number, showed inflation coming down. That's great and all. However, the CPI number is made out of 8 sections. One of it is health insurance costs. The government and Bidenomics changed the way they calculated health insurance costs. They said everybody's health insurance dropped 34%. Tell me if you think that's right. I don't think that's right. So anyway, that's a piece of the consumer, the inflation number. And so that comes out. It says inflation slowing down. Bond prices go up because people start investing. They see the economy's maybe going okay, and yields come down. So that's kind of what everybody's celebrating. But until we get government spending and debt, the United States the whole world has a debt problem. Keep issuing debt. I was reading, actually, Steve Shipp last night came up with a good thing. Super cool guy. Follow him. You can follow him on LinkedIn. He's pretty busy there. He talks about the economy and investing in distressed commercial properties, big stuff. But the M1 money supply, that's the cash flow in the economy, the everyday purchases. In 2020, the M1 money supply was about $4 trillion. It's $18 trillion right now. $18 trillion cash floating around the United States, when 2 years ago it was $4 trillion. That's why we're seeing this inflation. And that's why we're seeing these cash purchases on businesses and houses. And if there's money out there, prices are going to be up. So, like I always say, every deal is different. Let's talk to us, communicate with us. Let's go over your numbers. Let's see what works for you. Even though rates are down 50 basis points, actually a 30-year fixed mortgage, we are exactly where we were last November, except home prices are now 3% higher. So, waiting never happens. Only 3 things can happen if you wait. Rates are going to go up, you win. Rates are going to stay the same, you're going to make appreciation on that property, residential, commercial, land, whatever. If rates go down, you refinance. So pay attention. You'll hear people say, a lot of the real estate group rather than the economy and the bond market, says if and when rates go down. Well, show me the facts, show me the numbers, show me why. I haven't had anybody able to tell me why they think rates are going to come down. So until government gets spending, I think this is where we are. So anyway, give us a call. We're just pulling in here. Busy day. If we can help you buy or sell anything, if you have questions, let us know. I'm trying to. My vision for these lives is to be a little bit more interactive. It's tough when I'm driving and I can't read your questions. But seriously, if you have any questions, let me know what you want to talk about. I'm here for you. There's no stupid question, and we're here to help. So give us a call. Have a great day. Be smart, be safe, and we'll talk to you soon.